Hello and welcome to today's seminar. My name is Artūrs Breicis and I'm specializing in transfer pricing for over 20 years. Therefore, I will be happy to share my knowledge and the latest amendments to the laws in today's video. So, what are we going to talk about in today's video? First of all, we will look at the news, what happened at the end of the last year, the new amendments to the Taxes and Duties Act. And then we'll see how these amendments affect current and previous transfer pricing system. What is changed? What is not? So let's get started. So first about the agenda. First we will see about the amendments to the Taxes and Duties Act, and then we will see how these amendments fits into the current transfer pricing system. We'll look at the transfer pricing legislation network in order to enable you to know where to find the answers to the transfer pricing questions. Let's see what are related parties who must comply with these transfer pricing rules, and who are the entities who must prepare the transfer pricing documentation. And at the end of the presentation, we will see at the practical example how to fill out the control transactions report, which is the main kind of news in latest amendments to the tax law. So first of all, what's new? We've gotten amendments onto the law on taxes and duties entered into force as of 1st January 2026. So what is new? First of all, the brand new thing is so-called control transactions report. So this is also a part of the transfer pricing report, which is structured as a structured form in electronic declaration system, in tax authorities declaration system, where you submit other tax returns. So yes, this is the main change which we will discuss in more detail. But there are also other changes, like changes in transactional value thresholds, which governs who should prepare local and master files. Also, there is an increase in threshold for transactions, for control transactions, which should be included in the documentation. The current threshold was 20,000 euros. The new threshold is 90,000 euros. So you'll see that the kind of those amendments are beneficial for taxpayer, and yes, and there are some other additional clarifications. So, but the main issue, the new thing, is this control transaction report, which we will discuss later. And what is very important here, that this new procedure applies starting with reporting year that commences in 2025. So, if your company has financial year is calendar year, which starts on 1st January 2025, then these new procedures apply to your company. If you have a non-standard financial year which starts before 2025, then the old procedures would apply. Okay. So what about transfer pricing documentation system as it is currently? So basically, before we had those free tier transfer pricing system, having country by country reporting, we have master file, we have local file, and of course the most important was this local file and also master file for bigger companies. But this country by country reporting actually is for Latvian companies, probably it is relevant for some 3, 4, or 5 companies. Group of companies, which has holding companies in Latvia. So, but mostly the taxpayers were dealing with this local documentation file. But now the control transaction report, this brand new thing, actually is a document which summarizes the results of the local transfer pricing documentation. So basically, in order to prepare this controlled transaction report, you have to prepare at least partly or most of it, prepare the partly or most of the transfer pricing local file. Yes, so the control transaction report is based on a local file. So you cannot make a control transaction report without having made this local transfer pricing documentation, or at least those things which are required, like selection of transfer pricing methodology, making comparability study, and making financial analysis. So this is this transfer pricing system, and of course, what to do with the subjects or companies which are outside the system but still are should comply with these transfer pricing rules. So for this, we call it simplified transfer pricing documentation, but basically it's documentation which is governed by the Minister Cabinet Regulations number 677, which basically says that in order to support the arm's length, basically three things should be done. First is functional analysis. The second is method selection, and the third is comparability study. Yes, so basically, if the company doesn't qualify for to prepare local or master file, but still it carries out transactions with controlled companies, then this company should comply with those regulations. They probably do not need to make the local file or master file, but it must comply with this cabinet regulation. Okay, next, what is how the transfer pricing is regulated? What are the main legislative acts? Just for you to know, it's nothing new here, just a reminder. First of all, the arm's length principle is set out in corporate income tax law. Yes. The definition of related parties is Taxes and Duties Act, Section 1, Clause 18. Requirements for preparing and maintaining transfer pricing documentation, local file and master file, local master file, and this new report is governed by the Taxes and Duties Act, Section 15.2. Market value, determination of market value is also explained by the Cabinet Regulations, number 677, which I already mentioned before, paragraph 7 to 19, and the content of transfer pricing documentation, master file and local file is set out by the Cabinet Regulation number 802. Yes, so these are the main legislative acts which you should know in order to apply transfer pricing rules. So how to analyze those acts and how to decide which activities you should do and what acts you should comply with. So the first question you should answer here is whether your company is carrying transaction with related party or not. So first of all, you should look at the Section 1 or paragraph 18 of the Taxes and Duties Act and establish whether you have a transaction with related parties or not. If you do, then you have to move forward. If the answer is yes, then you have to go here to the next question. But if your answer is no, then you shouldn't kind of decide that transfer pricing do not apply to you. But first of all, you have to answer the question whether this party with whom you are cooperating is or is not the kind of resident in offshore jurisdiction. Yes, because so you should check the jurisdiction this party is coming from. If it's some place which is still considered as a low tax jurisdiction, then again you have to ask the next question. Go here to the next question which we will discuss shortly. So, but if the answer is no, then of course transfer pricing do not apply. So if you are not carrying out transaction with related party or with an unrelated party from the offshore jurisdiction, then transfer pricing do not apply. But if yes, then you have to go to the this question, and the question is whether you are making transactions with the persons which are listed in Taxes and Duties Act section 15.2. So there are three categories of the tax payers kind of listed there. First of all is transactions with related foreign companies. So not only related, but also foreign companies. So you should the related company should be foreign company in order to qualify for this kind of rule. The next is the individual which owns, which is considered as related party according to this section 118 paragraph from Taxes and Duties Act, but specifically this is individual, not a company. And the third is your counterparty is the company from the low tax jurisdiction. So if the answer of those three questions is from either of the questions is positive, then you have to comply this at least some transfer pricing documentation kind of requirements. And then the next question is about the thresholds of the controlled transactions. And the controlled transactions, first threshold is 250,000 euros. Yes, in order to count this value, you should sum all together revenues, costs. There's the positive kind of sign. So it's not deducting like the expenses, but all expenses, revenues should be counted together. Also, if you have loans, loan principal also should be added to this amount. So then you count everything together per year, and if you exceed the value of the transaction, this controlled persons exceeds this figure, then you have to prepare this local transfer pricing file. But you should submit it only upon request of the tax authority. So if the tax authority doesn't ask this report, you should not submit it, and you should just prepare and wait for the request. And then you have to, if the tax authority requests, you have to prepare it, send it within a 1 month period. But the next is that you have to prepare this control transactions report, which is the new one. And this should be submitted within 12 months after the tax year. And this submission is compulsory. You shouldn't wait for tax authorities. Reminder, you should do it within 12 months. The next threshold is 20 million. And if you reach the 20 million threshold, then the only thing which changes is that you have to prepare also the master file here. And also have to prepare and submit it by the tax authority's request. So until the tax authority is not asking for it, you should not submit it. Okay, and of course, if it's lower than 20 million, then master file is not required. And it goes without saying that in case if you exceed this 12 million, then still you have to still prepare local file and still prepare this control transaction. So the main thing which has changed under the new regulation is that the previous threshold 5 million as a threshold for local file submission is eliminated, is not valid anymore. Local file, yes, and but you have to. The new is that you have to prepare this control transaction report and submit it to tax authority already starting from this low threshold, right? So these are the main kind of difference from the old regulation. So the next, let me remind you what are the related parties. Just a checklist for you to be aware that you can answer the first question, or at least to start answering first question. So basically, related parties are based on one of the three criteria. It's either capital, or it's persons, or it's kind of coordinating action in order to reduce taxes. Yes, but this is very rare, the last one. But usually the controlled transactions are those that they are either parent and subsidiary, or owning more than 50% of the voting rights in companies, or one or several individuals owning more than 50% of the company's share capital, or the voting rights or ownership is below 50%, this case. But in this case, the counterpart, the company, should be a foreign company. So basically, if you have two Latvian companies, one company owns 30% in other companies. So these companies will not be considered as related. Okay? And the two companies could be considered as related if they have common ownership, either by a physical individual person or his or her spouse, relatives up to third degree, or marriage relatives by marriage up to second degree. Yes, and the last is that two companies are related if the board has same persons has majority of voting rights in the board, management boards. Okay, so if you have those, this is the first question. If you have the transaction with such a company, then you have to ask the next question, whether the company is, if it is parent and subsidiary, then the next question is whether it's a foreign company. And if it's foreign company and it's parent or subsidiary, then it's clear that transfer pricing applies. You have to prepare a documentation, and then you have to check for this threshold that you reach or not. So by reaching this threshold, you have to prepare this control transaction report, local file, and probably also a master file. So yes, this is basically Article 15.2 from Taxes and Duties Act, which basically says that both persons are liable to prepare transfer pricing documentation, including this control transactions report. And the first is this related parties who are foreign related parties, these individuals referred in this article, and low tax jurisdictions. Okay, so here is kind of to put together all this information, which I already kind of told you. The first threshold. Then reaching first threshold, you have to prepare this control transactions report and submit it to tax authority within 12 months period. Yes. So and you have to prepare this local file, but this shouldn't be submitted without specific request by tax authority. And if you reach the 20 million, then you have to prepare the master file. And in this section, you will find what to do if you are not qualifying for this section. For example, you have transaction with local related party, or you have transaction with foreign related party which is under those thresholds. Then you have to make kind of simplified or simple supporting of the documentation, or just simple supporting of the transactions, control transactions based on the this Cabinet Minister 677, which I already told you, that basically which includes functional analysis, method selection, and comparability study. So, a few words about what is the content of the control transactions report. So, the the amendments, the law is very kind of it's very short and very general. So basically, the information required is very general. Actually, this is almost all the information which I copied from the law, but I did it together. This the like to compare the local file with the controlled transaction report in order to show you where this information is coming from. So basically, control transactions report requires type of transaction, direction. Type of transaction is very simple. It means, for example, sell or purchase. Direction is type of transaction like goods or services. Direction is like sell or purchase. Total amount and transaction counterparty. So this basically comes from this section of the local file, which describes transaction and its legal description. But as you see, there are nothing required from the, let's say, industry analysis or the company or group overview, or not even conclusions regarding functional analysis. It is not required. Next, what is required is the selection of the transfer pricing method, and you can select it by selecting one of the 5 methods from the drop-down menu. And next, comparable sources of comparable data, and there the choice is between internal data or external data. Tested party, who applies transfer pricing method. Pricing indicator, for example, full cost margin or operating profit margin, or just price per unit, and the range of those indicators, pricing indicators. For example, profitability range from to, and finally, you should indicate the pricing indicator which the company actually have applied, or the result of the kind of financial analysis of your company. For example, if you have sold tax to controlled counterparty the goods and with applying formula full cost plus 6% markup, then you will apply you will indicate here this 6% markup. Okay, so this comes from the financial analysis from the local file. In the local file, you have to make a calculation of your actual results and make a segmentation or distinguish between related and unrelated parties, and make this conclusion. And finally, the example how this how this report should be filled out, control transactions report, how this should be filled out. And let's assume that we have this following example. Our company purchases goods from unrelated parties and sells those goods to related company ABC and unrelated companies. So the price levels applied to a related party are lower, as usually, and then applied to unrelated companies. And results of our methodology are here as follows. Tested party is our company. Yes. Selected transfer pricing method is transactional net margin method. Source of comparable data is Moody's TP Catalyst. And arm's length indicator is operating profit margin. So this is information which is included in a local file, and we make this local file and make those are the results. You can see, first of all, it's a comparable data analysis. We make this analysis using Moody's TP Catalyst. Yes, and what we do, we have selected 18 companies and 3 years, and analyze interquartile range of the operating profit margin. So what we find at the result of our analysis is that the average weighted result from 3 years is from 3.7 till 10.6%. Yes, and here we have applied this average for 3 years, but of course we have applied it, and we have substantiated it in the documentation. And why we do that? Because probably sometimes some tax authority maybe expects that you use the data from the latest for only from 1 year, but in this case we have applied 3 years averages, and we have made a substantiation for that. So this is our result. This is this range from our pricing indicator, and then we make a financial analysis of our company, and we find out that what we do, we make a segmentation, we take a profit and loss account, and then we split it between controlled and uncontrolled transactions, make the allocation of costs, and come to result that our profit margin is 6.83%. So this is the results we should indicate in the transactional controlled transaction report. Yes, this is this range, and this is the actual result. And also we have to indicate, of course, the total amount of sales. It's 6 million to related party. Okay, so how these are the figures, and how do they look like in this EDS system? This is as follows. First of all, in the EDS, you can open EDS, then you can find documents, corporate income tax documents, and then you will find this report. And the first step in the report is that you add this controlled counterpart, the ABC. Yes, the name of the counterparty is ABC. Then you apply registration number, insert the registration number. Then you select the residence from the drop-down menu, input address, and that's it. Next is that you apply the transaction for this counterparty, and here transaction type is also from drop-down menu. You can choose it's goods. Direction, it's either sold or purchased. Yes, we sell, so it's sold. Total amount is 6 million. And next method selection, also from drop-down menu, we select TNM method. Sources of comparable data, external comparables. So tested party, in this case, it's not shown, but it's our company. Yes. But you can select here also this company ABC if if this is true. So arm's length indicator is operating profit margin here. Again, here is from drop-down menu, and here next you can input arm's length range percentage here from 3.7 till 10.6. Yes, and the last you input your actual arm's length indicator applied 6.8. So this is basically it. So basically this is information which you should insert and report in the controlled transactions report. It's very simple, but as you can see, you cannot do it without making at least comparability study and your financial analysis study. Yes, so financial analysis of your company's results. So basically, either if we return to the local file, so and it seems that you can apply just prepare only halfway of the local file, but still in most of the cases you will not be able to correctly apply transfer pricing method and do the other analysis if you are not made correctly functional analysis. Yes? So basically even you are not preparing this local file and you are preparing just this section. Yes, even in such case you have to make this financial analysis, at least to make it in mind, to analyze and make some conclusions, and based on those conclusions you will be able to select a transfer pricing method and make a comparability study. So basically what I'm trying to say is that in order to prepare this controlled transactions report, you will have to do this work anyway, or at least to do the most of this work in order to prepare this report, which is mandatory required by the law currently. So this is regarding the main news. There is just one thing which I should also mention, which was actually clarified, which was not very explicitly regulated before. So how often the documentation must be updated? So currently the requirement is that taxpayer reviews and updates the global and local documentation file annually, yes, so each year. But if the circumstances are not changing significantly, taxpayer can do it once in every 3 years, except for the financial indicators of the tested party and previously accepted comparable data. So basically, each year taxpayer has to do the financial analysis, yes, segmentation or calculation of prices, plus update of at least previously accepted comparable data. So these things should be done annually. Yes. So this is actually it. This is it. What I wanted to tell you about the amendments and the current situation, current status, or current transfer pricing system in Latvia. If you have any questions, if you have some difficulties or questions, or you need us help with preparing transfer pricing documentation or filling out this controlled transactions report, please do not hesitate to contact us. Here, contact details are here touched, and thank you for watching, and see you soon. Thank you.